Over the past 2 years on this channel, we've identified stocks that have delivered exceptional returns, focusing primarily on valuation. Some examples include Meta when it was trading below $100 per share, delivering over 500% returns, Alibaba under $80 per share, locking in gains of over 100%, and SoFi below $7, generating returns of more than 300%. In this video, I'll show one stock that I believe has the potential to deliver similar returns over the next few years. And that stock is Pinterest, which is down 63% in the past 5 years and has a market cap of $17 billion, which is what it would cost you to buy all the shares outstanding in the market at today's price. Analysts have a price target of 38, meaning almost 50% upside. This image-based social media platform has become extremely popular, currently boasting over 600 million active users. In the most recent quarter alone, this figure grew by 12%. As a consequence, the revenue has also seen massive growth in the past 8 years, growing from $472 million to $4 billion currently. And analysts are expecting this trend to continue, as they have Pinterest reaching $4.3 billion this year and then grow to $6.8 in 2029. They've gone from being an unprofitable company to generating $1.9 billion in net income. A negative aspect, however, is that free cash flow is lower, currently at $1.1 billion, but profit is going to grow very fast because their margins are amazing. A gross margin near 80%, a profit margin close to 50%, and a free cash flow margin around 27%. Looking ahead, analysts are expecting earnings per share to dip slightly this year to $1.82, but then climb steadily to around $2.97 by 2029. If we assign a 20 PE ratio multiple, that would imply a $59 share price, which represents roughly 77% upside from current levels. And the most important reason on why I'm interested is valuation. In order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $32 per share, middle $46, and high $64. And because the stock is currently trading at $26 per share, this means that if my low assumptions occur, you would get a 14% annual return on your money, middle 21%, and high 28%. And therefore, if my high assumptions occur, you would get a 10x in your money in roughly 9 years, which is exceptional. Now, as far as my assumptions, I assume Pinterest grows revenue between 6 and 10% over the next 7 years. They average a profit margin and free cash flow margin between 30 and 40%. And I assign the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Now, this spreadsheet does not attribute any value to the balance sheet, but Pinterest has an exceptional balance sheet as it has $2 billion in cash and only $200 million in debt, which is nothing for a company that has a market cap of $17 billion, as we've mentioned before. But you might be wondering, why is the stock down so much in the past 6 months? Is the valuation is so attractive and fundamentals keep getting better? Well, it's because of the guidance they gave last quarter, and this article explains it very clearly. The stock dropped over 20% after its Q3 earnings, which was primarily driven by weak forward guidance in Q4, which otherwise tends to be a seasonally strong period for advertising revenue. For next quarter, the management projects revenue to decline to 15%, down 200 basis points sequentially. Another concern is that the US and Canada geography has been showing weakness, with lower growth in monthly active users and average revenue per user. But keep in mind, this is still growth, and this concerns investors about Pinterest monetization effectiveness in the region, especially when players like Meta, Google, and Amazon are growing at a faster rate compared to Pinterest. Not only that, Pinterest US and Canada region also contributes over 75% of total revenue, which adds another layer of uncertainty. But I believe social media platforms remain extremely lucrative, and Pinterest is no exception. Also, keep in mind, they are at an all-time high regarding monthly active users, and where I see a lot of opportunity is in the average revenue per user in other parts of the world that are more underdeveloped. For example, the average revenue per user is 21 cents in the rest of the world compared to the almost $8 of the US and Canada. This is why it grew 44% in the past quarter and when I see a lot of upside. And the same goes for Europe. In conclusion, I think Pinterest is a buy at today's price because their fundamentals keep getting better. They still have a lot of room for growth and the market has overreacted to weak short-term guidance, which has made the valuation very appealing. They are currently trading at a P of 9 for a company that is expecting double-digit growth with excellent margins. Lastly, if you're serious about investing, you know that picking the right stock isn't just about the story. It's about mixing it with the numbers, and that's exactly where stock analysis comes in. This site lets you dig deep, track up to 10 years of historical financial performance, see revenue, profit, margins, dividends, everything. If you want a discount code, you have mine in the description. They also have a free newsletter that highlights important market moves and stock fundamentals. Perfect if you want to stay informed without spending hours digging through data. I hope you found this video valuable. Let me know what you think about Pinterest stock in the comments and I'll see you in the next one.